like the overall revenue growth has been better than what was expected. But in terms of the overall numbers with respect to where the profit stands, I mean, profit at that numbers was not expected. The idea was that it will be a much better number than what it is at right now. In terms of the overall numbers as well, you know, as you can see that's flashing on your screen, the expected versus that of the numbers that have actually come out. 24 crores of profit was not expected. The expectations was much better than that, but overall in terms of the EBITDA growth, it's been muted, which was kind of on the cards. Margin picture also not looking nice as it was expected, because dark stores that are being added, the rate at which they're being added is something that is putting the overall pressure on margins as well. In terms of the commentary, that it will be important to watch out for as to what the profitability in terms of both bottom line as well as margins looks like in terms of it stands. We are yet to analyze the overall segmental breakup right now, but this is the overall picture as to where the internal earnings stands right now.
Okay, one sec. It's starting to pair gains, and we have given you the cut versus estimates. But look at EBITDA as well, 115 crores versus 178. Margins have also come in a little poor at 1.6%. So those are some of the first cuts coming in. But net profit is down 36% at 25 crores versus 39 crores. Revenues are up 23%. I think this is what the street is probably liking. The stock nearly 4% up right now. EBITDA is up 60% nearly at 115 crores versus 72 crores. This is the first set of numbers that we are seeing. Mahima, you talked about margins. What was the expectation on margins?
The expectation was at around 2.7%. So that's with regards to EBITDA margin. But we've also got the segmental performance right now. Food delivery has slightly done better than what it did YOY basis, around 1900 odd crores versus that of 2200 crores. But as compared to sequential uptick, there's hardly an uptick of 200 crores in the food delivery business. We've seen this stagnation over the past few quarters in the food delivery, and that still continues. So that's disappointing. Happy Pure business, however, has done very well in terms of YOY basis. The segment has doubled in terms of its revenues almost, as compared to sequential performance also, almost a 500 crore uptick there. So Hyperpure seems to, and brokerages have already you know, come out and said this, that Hyperpure could be the next Blinkit for Zomato's growth, and that's actually happening. Quick commerce overall sequential good uptick from a 1750 crore to almost 2400 crore. So good uptick there, and YOY basis also quick commerce has done well. Lastly, going out business revenue is slightly declined on QoQ basis, but a good uptick in terms of YOY basis.
Let me get across Shobhit Singhal very quickly. Stay on with us, Mahima. Shobhit Singhal, research analyst at Anand, Rathi Institutional Equity, is joining us. And Shobhit, have you had a chance to see the first cut of numbers? Fair to say is that food delivery has performed better than expected. Quick commerce continues to be the key driver.
Yeah. Hi. Good afternoon. So on the revenue side, both on the food delivery and the quick commerce, so the numbers are looking good on the GMV and the revenue front. So on the food delivery, we were expecting around 16% type of GMV growth, and they have reported around 16.4%. And even in quick commerce, we were estimating around 130% type of year-on-year growth. But the company reported around 155% because in this quarter, Blinkit as well as Instamart, we believe that they have gained the market share from the Zepto in this quarter. Because even if you see on the user side also, active user side, so Zepto users has come down, whereas if you see Blinkit and Blinkit users have went up Q1Q as well as on a year-on-year basis.
Shobhit, hi, Mahima also joining in. Just want to get a sense on the margins. You know, last quarter, that is FY25, the margins stood, quarter one FY25, the margins stood at almost 4.2%. The expectation this quarter was that there will be some recovery as compared to where the margins stood in Q4 FY25. The expectation was at 2.7%, but it's come at around 1.4%. And the overall dark store additions also this particular quarter has slowed as well. What are your expectations? When do you expect these margins to recover?
So see, on the food delivery side, anyway, so we were expecting that because because the food delivery adjusted EBITDA margins are anyways on the company guided range of 4 to 5%. So we were expecting around minimal Q-on-Q margin expansion this quarter. For Blinkit, because they have gained some market share, and I believe that even the discounting and marketing efforts are also going up. So we believe that on that front also the losses. So we have not seen the number on the segmental wise on the margins front, but I believe that losses should be at par with what they reported in Q4 or slightly above that.
Shobhit, this is Harsh also joining in. Quick check with regard to how you view Hyperpure, because that's a segment which is one of the other segments which is less talked about, but it's shown robust growth and contributing well to the top line. So what's the sense there, sir?
See, so Hyperpure, if you see, so it's a long-term play for the company, right? And it has a big opportunity as well. But we believe that the overall contribution on the overall revenue front for the company will be at this level only. And because it's a high volume and low margin business. So, so we believe that company focus will always remain on the FD and the quick commerce side, and then on the district and then Hyperpure side.
Shobhit, just wanted to get a sense in terms of any analysis that you have on the GMV growth, both for food delivery as well as Blinkit business, because food delivery QOQ basis, the revenue is almost flat, slight uptick in terms of YOY basis, but Blinkit has seen a good growth.
Yeah, so on the food delivery anyway, so we were expecting around this kind of year-on-year growth only, 16%, because if you see from the Q4 to Q1, anyways, because of the seasonality and all, so Q1Q you cannot see, but on the year-on-year basis, we were expecting around 16% type of GMV growth only, which they are reporting in last 2 quarters, because they are losing some market share to Swiggy on the food delivery side. But on the quick commerce side, yes, the numbers are very good, and because they have gained some market share from the Zepto in this quarter. So yeah, and so the numbers are actually above ours and street expectations. So we were expecting around 135% type of year-on-year growth on the Blinkit side, but company reported around 155%, which we believe is tremendous growth.
Okay, excellent. Thank you so much, Shobhit, for that perspective. We'll let you go on that note. Sudeep.